Morning, Steve Free in Chicago with the morning grain comments. Well, I think most people in the grain industry were surprised at yesterday's market action after Friday when Secretary of Agriculture talked about China coming on buying an additional 10 million tons of soybeans and also talking about the fact that they could come in and buy corn, ethanol, beef, and poultry as part of the trade discussions. The market thought we would be trading higher. We did open higher, but then we traded lower, led by wheat. Wheat market continues to see a steep decline in prices in both Europe and Russia, and it seems like futures are following that with little buying underneath the market, and contract lows triggered heavy selling in the marketplace. We also see that maybe some of the longs that are expecting a deal to increase U.S. export trade might be liquidating, throwing in the towel because of the weak price action. And some of the fund managers are saying that even with the deal, you could see higher world grain production in 2019, and stocks really not changing that much. Still though, if China comes in and buys U.S. corn and wheat, we would expect some kind of price positive reaction to it, but it's just from lower levels than what we thought. I'm sure that farmers are frustrated by the fact that they're not getting the bump in prices that they were expecting with a trade deal. And at the end of the day, it was interesting in that some people in Washington thought that the U.S. Trade Representative was surprised at yesterday's weak price action, given all the talk about deals. South American weather is good. About half of the Brazilian soybean crop is harvested. Farmers are active sellers down there. Argentina weather is also good. Here in the United States, we still have cold temperatures that are affecting logistics on the river situation, truck movement. It is forecasted that the first week in March across much of the Midwest could be record low temperatures, which means we're not out of this winter wonderland quite yet. This could delay, along with the flooding across southern part of the U.S., early spring weather. USDA also came out with an update of February winter wheat crop conditions. For the most part, winter wheat crop conditions declined from November. The only state in which actually saw an improvement from the November ratings was Kansas. Funds yesterday, active sellers of beans, meal, oil, 25,000 corn, 12,000 wheat. We now expect the small short in the beans, still long short meal, short about 50,000 corn and 50,000 wheat. We continue to see big liquidation in the March open interest as we get close to first notice day, and open interest in general is down, especially in the corn. So technically we've got a weak market. We tend to make lows in February. Market tends to try to rally as we get closer to the growing season, and we'll be just kind of watching for any news that comes out about any trade deal in China and price reaction. But right now, I think most of the fund managers are worried about the world economy slowing global food demand, and they're worried that higher crops in 2019 will offset the higher trade that China may do out of the United States. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.